What up, crypto warriors and social crypto back at it again. Today is Friday, March 27, 2020. Amateurs sit and wait for inspiration. The rest of us just get up and go to work. Don't sit around waiting for a miracle to happen. You want something to happen? Go make it happen. And when I was looking for my inspirational quote for today's video, this was just happenstance. It just happened to be in the picture that I'm using for the quote today. Let's get into it. All right. Coinbase Wallet integrates support for DeFi lending apps. Per a March 26 announcement, Coinbase Wallet will now allow users to earn interest on cryptocurrencies through the DeFi apps Compound and DEX. About time Coinbase got caught up to the likes of Binance and KuCoin and Huobi, all these other exchanges, especially Binance. They've been killing it as far as allowing their users the opportunity to earn interest on the cryptos that they have. Now it seems like Coinbase is following suit to get into the game as well. Coinbase Wallet integrates support for DeFi protocols Compound and DYDX. With the integration, Coinbase Wallet will support lending for Ethereum in addition to a range of Ethereum-based tokens. So it's because it's DeFi and because these protocols are being used or being not being used, but these protocols are built, not protocols, but these DeFi apps are built on the Ethereum protocol. This is why you'll be able to earn interest on your Ethereum and your Ethereum-based tokens. Both Compound and DYDX comprise algorithmically driven automated lending platforms built on top of Ethereum, with DYDX also offering margin trading services. Be careful with that if you want to, if you're going to take advantage of using this DApp. While lending interest rates are floating, the annual returns offered by Compound and DYDX range from 0.03% to 4.17% at the time of Coinbase announcement. Funds worth nearly $79 million are locked up in Compound at press time, and DYDX smart contracts currently manage more than $20 million. It may seem like chump change in the world of finance, but remember, this is just the beginning, and you are getting in on the ground floor. Not financial advice, of course. The security risk of decentralized applications. The exchange states that the integrations will allow users to earn interest on their crypto holdings in just a few taps, adding that users can quickly cash out by withdrawing their crypto from the DeFi smart contracts to their wallets. Despite the company's optimism, Coinbase urges users to exercise caution. And this is a quote, DeFi lending apps are relatively nascent and come with risk. Do your own research. Look into it. Before I use anything, I'm going to do my own research, look into it and see if it's something that I want to use. I suggest you do the same thing. DeFi apps are programs running on the blockchain, and like any computer code, they can potentially have bugs that cause you to lose money. Returns are not guaranteed, and your deposits are not insured. So because they're dApps or decentralized applications, they're not insured by Coinbase, FDIC, the government, the dApps themselves. They're not insured. So always invest what you're willing to lose. I hate saying that. What does that even mean, right? Nobody wants to lose anything. Invest cautiously, I should say. The report asserts, and this is from Zengo. Zengo warns of major dApp security vulnerability. I don't know why I'm starting right now. The report asserts that when a user grants a smart contract permission to execute a single transaction involving their wallet, the dApp is granted full control over all their tokens held within that wallet. Zengo also highlights that the authorization is permanent, meaning that even users who have ceased to use the dApp are still vulnerable to the flaw. So that's one of the flaws right now with decentralized applications. You know, if you're using it on your mobile phone, for instance, and you're lending out your cryptos, lending out your Ethereum, and you may have taken it out of the smart contract, you're saying that because it's still on that dApp, it's not in your full control. Not your keys or not your coins, not not your keys, not your coins, basically. Be careful. Next, we have Jack Dorsey's Square Bank will open in 2021. So, Bitcoin advocate and Twitter CEO Jack Dorsey just had his application to launch Square Financial Services Inc. approved by the FDIC. This means that the U.S. financial services and a mobile payment company whose Cash App allows for payments in Bitcoin will soon be able to issue loans to commercial merchants. First approval for industrial bank in over 10 years. So this is the first industrial bank to get approved in over 10 years. And I had to look up what's an industrial bank. An industrial bank definition, according to Investopedia, an industrial bank is a state-chartered financial institution usually owned by a commercial firm that is not regulated by a federal banking agency. Industrial banks accept customer deposits and provide loans for consumers and small businesses. Industrial banks are also known as industrial loan companies. So, gotta do my own research. I don't know what an industrial bank is. Look it up. It's basically a bank that's going to provide for commercial loans. Square Financial Services Inc. to provide commercial loans. According to the release, Dorsey's bank will provide commercial loans to merchants using Square's existing payment system. So if you are familiar with Square, it's an app. If you, like for me, for instance, sometimes I take payment for my services because I'm a personal trainer through Square. It's easy on the app. They send your payment. I can use take payment via credit card, whatever the case is. They sign for it right there on the app. Everything could be used through Square's existing payment system. It will be headquartered in Salt Lake City, Utah, where it is still awaiting approval from the Utah Department of Financial Institutions. So they still got to get a state approval, just like it says right here. State chartered. Once this is received, it will mean that the bank should open its doors for its first commercial customer in 2021. Acquiring the FDIC approval was no easy feat. They must meet criteria based on no less than 7 different factors. So they had to meet 7 different factors, and one of those was, according to the official approval order, Dorsey must stump up a minimum of just over $56 million in initial paid in capital funds. So he had to cough up $56 million to get this approval. All right. So, what do you guys think? Is this a good thing? We see that Coinbase is finally getting into the DeFi lending space. We saw that last year, Coinbase started offering customers on their Coinbase platform to be able to get a return in Tezos. So that they all started offering staking via Tezos, the Tezos coin, and now you're able to do that with not staking, but earning interest through lending and in margin trading in some cases with the DYDX platform or dApp. Earn some interest. All right. Again, do your own research. And also now, Jack Dorsey's Square app, all right, which owns the Cash App. Now they're offering they just got their bank license basically for the state of Utah, or they didn't get their bank license for the state of Utah. They're waiting for that charter to come through, but they were approved for the insurance from the FDIC. Crypto banks is the wave of the future. Anything around cryptocurrency is the wave of the future. Again, we are on the ground floor. Please do your own research. Look it up. The old way of doing banking is being phased out as we speak, and cryptos is the new wave. Let's discuss it in the comment section below. It's your boy Sergeant Crypto. Thanks for watching. Smash up that like, hit that subscribe button, the notification bell, share this video, and again, I'm out. Peace.